Well, my guest now is Ryan Bourne, the R.Evan Scharf Chair for the Public Understanding of Economics at the Cato Institute. He says this level of growth is the new normal. So welcome. Do tell us, how so?
Well, it's always you always have to be careful looking at individual GDP numbers and look at the longer term trends. And what we appear to be seeing now is that after a few quarters where we saw over 3% growth through the end of 2017 and through 2018, the economy appears to have returned to a just over 2% growth rate that we saw before that in 2016 and 2017. And that's because as employment gets high and unemployment gets low, it becomes much more difficult for the economy to generate more GDP through adding jobs. So therefore it relies on that underlying productivity, and that appears to be growing with normal jobs increases at around 2%.
So then would you say it's safe to say that the concerns that people had about a slowdown in the US economy and a potential recession at the end of 2020, is that off the table now?
I think that's right. I think we saw a lot of panic with the inverted yield curve earlier on this year, but it appears as if the economy now is settling around a 2% growth rate. I believe the last Bloomberg survey suggested there was now about a 26% probability of a recession over the next 12 months. That's slightly elevated, but obviously a lot lower than it was just a few months ago.
Well, obviously, we have a new wrinkle. We know that we're 16 months into the US-China trade standoff, and President Trump tonight signed the controversial Hong Kong Human Rights and Democracy Act. And we know this adds to already the uncertainty that we're seeing now, and then wrapping up phase one of a trade deal. We know that China is likely to respond. So what does this escalation in tensions mean for some of these businesses and the US economy? People are really hoping to see a conclusion to this, perhaps at the end of this year.
I think almost all economists are agreed that the trade deal, through the act of the tariffs themselves, have hit the productive potential of the economy, so led to a bit of a slowdown from what we otherwise would have seen. What nobody's quite clear about is just how much the uncertainty of where this is going to end up has actually deterred business investment. Business investment has been subdued now for over a year, and a lot of people put a lot of that down to the China trade war. So clearly what we've seen today does sound like it's going to lead to a response from China. So if businesses perceive that this is going to lead to a continuation of what we've seen, then we may see business investment continue to be subdued.
And do we have any early estimates as to how, obviously the uncertainty as well as the existing tariffs, what that's actually done to the US economy so far?
Well, most of the analysis that we've seen have seemed to suggest that consumers are by and large internalizing the cost of these tariffs, so it's raising consumer prices. But what a lot of people forget is that a lot of the importers of goods are actually businesses themselves. So they're seeing their costs of production go up, and that's one of the reasons why they're not clear whether they want to invest, because they're seeing their existing cost base go up and they don't really know what their cost base is going to be in the longer term.
Now that actually does tie into what we're seeing with unemployment numbers. Obviously they're near a 50-year low at 3.6%. And when you have a labor market that tight, you're seeing some companies unable to expand because they can't hire the workers, they're already employed. Walk us through a little bit about the pros and cons for an economy when you have such a tight labor market.
Well, evidently, a tight labour market, other things given, is a good thing. But it does make your capacity to grow from there much more difficult. So the only way you can really get growth when you've got near full employment is innovation which generates more in the way of productivity. Firms making investments that allow themselves to grow because workers are able to produce more with less. Now, clearly, one of the big concerns with the trade deal is if you don't know where that's going to go, it actually makes it very uncertain as to what your cost base is going to be in making those investments and whether those investments will turn out to be profitable. So that's what companies are kind of struggling with at the moment.
And just quickly, we obviously know that the Fed is watching a lot of different indicators. How do you see this affecting what they do in terms of rate hikes next year?
Well, I think at the moment, as I say, it seems like steady as she goes. We're not seeing an uptick in unemployment, which I think they'd have taken as a potential leading indicator for a sharper downturn. So I expect we'll see kind of steady as she goes in regards to Fed policy. The really interesting question is what this means for the election, because if Trump goes into the 2020 campaign with the economy still relatively strong, then he has a good story to tell. It becomes a lot more difficult for a lot of those undecided voters if they're not able to say, I'm able to vote for Donald Trump despite not liking him for other reasons because the economy is doing so well.
And just very quickly, because a CNBC and Acorn survey showed that only 34% of Americans say that the next presidential election will be about the economy. But meanwhile, in terms of what they worried about today, every day around the kitchen table, the economy and jobs are at the top. Do we have any reason why they had this dichotomy about how they view the economy?
I'm not aware of the distinction between the polling numbers that you suggested, but there are some reasons to worry for the president. You know, if you look around the world, for example, even when the economy was doing relatively well in the UK, in the build-up to the Brexit vote, people still decided to vote for significant change in terms of delivering Brexit. So we're actually seeing some instances around the world where people do seem to be shifting away from the economy as being the preeminent issue which decides how they vote. And Trump will be very aware of that. Of course, you want to negate that as much as possible by going into the election with as strong an economy as possible. And that's why I think he'd have hoped that he could have got this phase one trade de-escalation deal agreed, and why he would have been a bit unhappy on the surface at having to sign this legislation from Congress in regards to Hong Kong today.
All right, thank you so much. Great having you on. Ryan Bourne there, the R.Evan Scharf Chair for the Public Understanding of Economics at the Cato Institute.